If you bought a home using an FHA loan, there's a really good chance you qualify for an FHA Streamline Refinance. And maybe your interest rate's in the 6s or even the 7s, and you've heard interest rates are coming down or have already come down. So you might be wondering, can I refinance my FHA loan easily without jumping through all the hoops all over again? The answer is yes. And it's through something called the FHA Streamline Refinance. It's one of the fastest and most simplest refinance programs in the entire mortgage world. In this, we're going to deep dive and I'm going to break down how it all works, how someone qualifies, how much it'll save you, the steps, the costs, and insider tips that most lenders never explain clearly. And by the end, you'll understand everything you need to decide whether it's the right time to do an FHA Streamline for you. Hi, I'm Alex Ramirez and I help home buyers and homeowners navigate the mortgage process with confidence. And don't forget to like, subscribe, and tap that bell so you never miss my weekly updates in the future. Okay, so now let's dive in. So what is an FHA Streamline Refinance? The FHA Streamline Refinance is a simplified loan program from the Federal Housing Administration designed specifically for existing FHA borrowers. It allows you to refinance into a new FHA loan with less paperwork, less stress, and faster turnaround times, usually with the goal of lowering your monthly payment or locking in a better interest rate. And unlike a standard refinance, this program doesn't require full financial requalification. That means no tax returns, no pay stubs, no W-2s, and no home appraisal. It's all about making things easier for responsible homeowners who are already in the FHA system. Here's an example. If you bought a home for $450,000 in 2022 at a 6.75% rate, your total payment might be around $3,200 a month. If today's rates are around 5%, a Streamline could lower that to about $2,800, saving you roughly $400 a month or nearly $5,000 a year. That's real money back in your pocket without a full-blown mortgage process. And there are two types of FHA Streamline refinances. So here are the two types of FHA Streamline refinances, and understanding which one applies to you makes the process a lot smoother. So number one, the non-credit qualifying Streamline. This is the most common version. It doesn't require income verification, debt to income qualifications, or a new appraisal. But the lender still pulls credit, but only to confirm that you've been making your mortgage payments on time. And it's best when nothing about your loan setup is changing. So everything's going to stay the same. Same borrowers, same property, just a better interest rate and a lower payment. So here's an example. You and your spouse bought a home together and nothing's changed in your employment or your household setup. And you'd like to use this route, this is going to be the way to go. And number two, credit qualifying Streamline. This version is used when you're adding or removing somebody from the loan or your financial situation has changed enough to improve your interest rate. This one does require income documentation and credit review, but it is still far easier than a standard refinance. So the non-credit qualifying Streamline will be the most common, and this is what lenders will talk about the most. So let's go over some core eligibility requirements. To qualify for an FHA Streamline, there are a few firm rules. Number one, you must already have an FHA insured mortgage. This isn't for conventional or VA borrowers. Only current FHA homeowners can use this program. And number two, your loan must be at least 210 days old and you must have made at least 6 full on-time payments. And this rule prevents people from refinancing too soon and from lenders churning loans. And number three, you must be current on your mortgage. No late payments in the last 6 to 12 months and no more than one 30-day late in the past year. And I say this range because if you just purchased your home and you've only owned the house for 6 months, then the lender would only need to see the last 6 months of payments. And number four, it must provide a net tangible benefit. That means it has to make financial sense for you. A lower payment, shorter term, or improved loan structure. And number five, the property must still be your primary residence. Investment or second homes are not eligible. So you have to prove that this is your primary residence. And here's an example. A homeowner who bought in February 2023 can refinance until at least August 2023. 6 payments and 210 days must pass in between that time. That's why timing your refinance window is so important. These requirements ensure you're stable in your home and that the program truly helps you. So let's go over the net tangible benefit rule. This rule is at the center of every FHA Streamline approval. The net tangible benefit ensures that the refinance truly improves your financial situation. You at least have to improve your interest rate by at least 0.5% or greater. It can also be met if you move from an adjustable rate mortgage to a fixed rate mortgage. Okay, here's an example. If your rate is currently 6.5% right now, your new rate would have to go down to at least 6% in order to do the Streamline refinance. And if rates improved a lot more than that, then the rate can go down even more. That 0.5% is just a minimum requirement that FHA has to see when they do the refinance. This rule protects borrowers from refinancing when the savings are minimal and making sure lenders just don't turn loans and do refinances for people when it doesn't make any benefit to them. And by the way, even if your rate drops slightly, if the payment difference doesn't pass the net tangible benefit test, the loan can close, and this usually happens if the lender is charging you quite a bit on fees. For example, the most common thing is lenders telling a customer they can drop their rate significantly, but not explaining the origination or discount points that a borrower needs to pay to do the specific refinance. So that does impact the overall net tangible benefit. So always make sure your lender shows you the before and after comparison to prove your benefit. It's part of every single FHA case file. And if you've gone to this point in my video, I want to let you know that I appreciate you and wanted to give you something for free to help you along your way in the process. So go ahead and check out my description and you can get your free FHA Streamline guide. And if you're ready to take advantage right now, go ahead and call or text me. My number is going to be here on the screen. Or you can go to my description and schedule a discovery call by going to my Calendly link. Okay, so what paperwork and what is the process for an FHA Streamline? This is where the Streamline part really shines overall. The documentation is minimal. Here's what you'll need to provide: a basic refinance application. You'll work with your loan officer on this, and your current mortgage statement. Just get your last month's statement. And also your homeowner's insurance declaration page, a copy of your ID or IDs, depending who's on the loan, and the mortgage note on your current loan. This is usually in your old set of documents. And sometimes you'll need 2 months of bank statements, and that's it. So no tax returns, no pay stubs, or employment verification unless the lender specifically requests that. So there's no appraisal, so even if your home value dropped, it won't affect your ability to do the FHA Streamline. And because FHA loans are insured, the lender already knows the property meets the minimum standards. And here's a real life example. A couple in Oxnard bought their home for $480,000 in 2022. In 2024, home values slightly dipped in their area and they worried they couldn't refinance, but their Streamline closed in 15 days, no appraisal, no stress, and their payment dropped by $350. That's real savings. It's truly that simple when the lender understands FHA guidelines and the process. So let's go over the benefits of the FHA Streamline. So the benefits are very powerful. Number one, we have speed. The average FHA Streamline closes in about 2 to 3 weeks, and in some cases a lot faster. Number two, less documentation, no income or appraisal. Number three, lower payments, so you get a reduced rate and a reduced payment. Number four, credit flexibility, so no FHA set minimum score. And also lender credits can offset or cover closing costs entirely. And lower MIP. Since 2023, FHA reduced its annual MIP, so further cutting payments even more. So the mortgage insurance premium is less. But beyond the numbers, a lot less stress and no overwhelming process to do this type of loan. So here's an example of Ventura County firefighter refinance using a Streamline after rates had dropped 0.875%. His monthly payment fell by $420. He closed in just 14 days, all while working 24-hour shifts. Streamlines are designed for busy homeowners who want relief without a full mortgage workout. So let's go over the costs, limits, and also the cashback rules. Let's talk about costs because this is where borrowers have questions. Every FHA Streamline refinance requires a new upfront mortgage insurance premium, so the UFMIP, equal to 1.75% of the base loan amount. However, if you refinance from one FHA loan to another within 3 years, the FHA provides a partial refund or credit of the original UFMIP. The refund is not paid in cash, but rather applied as a credit toward the new UFMIP on your refinance. And you can't receive more than $500 cash back at closing. This refinance is only to lower your payment and your rate, not to get cash out. And if lender credits don't cover all fees, you'll pay the remainder out of pocket unless you're doing a credit qualifying Streamline that allows limited roll-in. So closing costs and escrow. Closing costs are typically less than any other type of refinance. With your new loan, your lender will set up a new escrow account for taxes and insurance. So they'll work on that when they do the loan, and your old servicer will refund the previous escrow balance within 2 to 3 weeks after funding your new loan. Many lenders offer lender credit to offset closing costs, meaning you could bring little to nothing at closing. And your loan officer can show side-by-side comparisons to see which structure saves you the most over time. And if you take a rate maybe 0.25% higher, your lender may be able to give you enough credit to pay all of your closing costs, effectively making your refinance for free. Make sure you talk to your loan officer about those options. So weigh out your options with your loan officer. In some cases, no lender credit may be a better deal to get the best rate possible, with you paying or rolling in some of the costs to do the refinance. In other cases, it may work where you get the lender credit to pay all of your closing costs. Make sure you speak to your loan officer and balance the two. So the typical timeline, let's go over that. Here's what a standard FHA Streamline timeline looks like. So day 1 to 2, an application and disclosures are signed. Day 3 to 5, so the file is reviewed, FHA case number is assigned. And day 6 to 7, underwriting and condition clearance. The file's already been reviewed. And day 11 to 14, closing documents are being prepared. And day 15 to 20, so signing and funding. So you've already signed your loan documents. So total 10 to 20 days, or in some cases, even faster. Traditional refinance can take a bit longer, so this is dramatically faster than any other type of loan. Here's some pro-level insights most borrowers don't hear. Apply when you could drop your rate 0.5% or 0.75%, or even higher in some markets. That's a sweet spot for the benefit and savings. And remember, you can streamline multiple times. It's not a one-time thing, as long as you meet the 210-day and also 6 payment rule each time. And remember, lenders have overlays. Some require 620 score, others are more flexible. Always ask your loan officer about the options and what they offer. And timing matters. Closing near month end may let you skip a full month's payment, so the following month you could skip. And you don't have to refinance with your current servicer, so you can talk to a loan officer, and this way you get a new lender, a new servicer. Also note that FHA loans are assumable, meaning if you ever sell your home, a buyer can take over your low rate FHA loan. So doing a streamline now could make your home more marketable later if rates rise and if you decide to sell. And if this additional information in the video helped you make a decision to take action right now, go ahead and check out my description and get your free FHA Streamline guide. Or go ahead and call or text me. My number is going to be here. Or you can go to my description and schedule a discovery call with me. So who benefits the most with an FHA Streamline? This program benefits several types of homeowners. Borrowers who bought during high rate years, so 2022 to 2024. Homeowners with little equity or declining property values. And also borrowers who couldn't qualify for conventional loans due to credit or maybe debt ratios, and that's why they're in an FHA loan. And it's also excellent for homeowners who plan to stay in their home 2 to 5 years and want to maximize savings before potentially selling or even moving. And let's go over some pros and also cons. And here are some pros. It's fast and easy process, lower monthly payments, no appraisal or income verification, and it can be done multiple times if the benefit exists. And it's also possible to close with zero out of pocket. But here are also the cons to consider. You pay a new upfront mortgage insurance premium each time, and you're extending back to a 30-year term, and you could restart your payoff timeline. And also, it's not available for current investment properties or second homes. And there's no cash out option. And here's a tip. If you plan on staying in the home long term, consider making one extra payment per year. This helps offset the longer term and also keeps your payoff on track. And here's when it makes sense to do the FHA Streamline. An FHA Streamline makes the most sense when your rate can be reduced by 0.5% or more lower than your current interest rate, and that you've made at least 6 payments and plan to keep the home. And you want to lower payments quickly without a full financial review. It may not make sense if your current effective rate, including MIP, is already low, or if you plan to sell within the year or maybe a lot sooner. But if you're staying put for at least 2 to 3 years or more, the savings usually outweigh the costs. So the FHA Streamline Refinance is one of the most powerful tools available for homeowners who already have an FHA loan. No appraisal, minimal documentation, and the ability to lower your payment fast. It's a kind of program that truly lives up to its name. And if you're currently paying more than 5.75% interest rate on your FHA loan, it's time to explore your options. You can reach out to your lender, or you can reach out to me and we'll run the numbers together to see if it's even worth it. Sometimes the smartest move isn't buying something new, it's optimizing what you already own. And that's exactly what the FHA Streamline Refinance helps you do. And remember, be smart, be prepared, and let's get you home.